Today, I want to start off with talking to you guys about the importance of sticking to one system. One trading system is the way to go. Now, it's very easy for a lot of beginner traders to start trading and be flooded with 600 different strategies. 1,000 different indicators, 6 billion ways of looking at structure using, different oscillators, MACD, moving averages, Fibonacci, market structure, supply and demand, you know, Heikin-Ashi candlestick. Trading, you're in a space where you've got an infinite amount of possibilities. And because of that, that's why it's so key to have a system that you can not only control, but one that you can test over time. Trading is a science in some ways, in a sense that most scientific experiments or most scientific discoveries, they take place under a controlled system whereby the environment is controlled, be it temperature, pressure, volume, you know, just so that they can establish something very, very simple: cause and effect. So, once you have your controlled system, you're able to iteratively develop your system and get it to a point where it's consistently profitable. Now, if you have a trading system where what's going in is a multitude of different strategies. So today you're trading pro trend, tomorrow you're trading counter trend. Next day you're using Fibonacci to enter. The day after that, you're using, simply, another oscillator. You go on YouTube and you hear that this is the best indicator. It's going to change your trading strategy. It's going to, you know, this is what you have going on. You have a system where you have so many different inputs, so many different inputs. So how are you going to establish cause and effect? So let's see. On the left-hand side, these are causes. On the right-hand side, these are your what's coming out, your profit, your effect. This is why it's key to minimize the things you're looking at when it comes to trading. Simplify your trading system. Okay. If you have 6 billion things you're looking at, how are you going to establish cause and effect? How would you know this has caused that, or this has caused that, or this has caused that? So what you find a lot of beginner traders do is they spend 2-3 years oscillating between all these causes, and their system is just a combination of different variables, and it's very difficult to establish effect. Now, not just is it, it's not just difficult to establish effect. After you've established effect, you also now need to refine that. Okay, you need to refine that in a way that's gonna lead to sustainable profits. You need to refine a profit taking strategy. You need to refine a risk management strategy. Yeah, right. You need to refine a position sizing strategy, and so many different things that's gonna result in you actually being profitable. Now, it's fair to say most traders on this app are simply just trading without a system. I would not call this a system. I would not call this a system. I would call this, just an experiment or kind of a game. Right? That's what this is. So this is what trading is not. So just refrain from doing that. If it's worth taking a moment now to analyze. What are my trading system? What is my trading system? Have I tested my trading system? Have I back tested it? Do I know simple cause and effects? Do I have a simple exit entry strategy, profit taking strategy? Once you have all these things, then then you can start to say, all right, how can I get to the next step? All right. But this takes time to perfect. And if you're looking for help to do that, feel free to hit me up. But this does take time to perfect. Okay. All right. Well, we'll leave it there today. Today, I also want to talk to you about the price action. I haven't done a video in a while, simply because my weeks have gotten extremely busy. So busy. So what we're going to do today is, what you've come here for, which is going to look at, where is the next trade coming from? And I think the current market structure and the current price action is a beautiful representation of the importance of understanding that market structure itself has various levels. So we're going to be talking about all the various levels of market structure today as well as understanding what's going on right now as far as Bitcoin price action goes. But before we do that, big shout out to everyone who has followed recently. Welcome to the family. Hope you're finding these useful. Don't forget that we've got boot camp as well coming up last Sunday of this month. So if you're looking to get in tune with that, feel free to hit me up. It's on the website, tradejournal.co.uk. Or just tap that button and you can send me a WhatsApp direct. Now we had a session in the last Sunday of Jan, and you know we came to realize that during that session it's so key. It's so key to understand. It's so key to actually understand what you're doing as a trader, honestly. Um, because what you don't want to do is beat around the bush for 5, 6 years, um, and ultimately get frustrated so much so that you decide, you know what, trading is not for me. It's not that trading is not for you. It's more so you have been taught to believe, or you have practiced trading in the wrong way. All right. It's more so that. So just be careful, you guys, as you assimilate information online, and as you progress as a trader. Just be careful the type of mentors you are approaching, where you are learning from. Be careful and do the due diligence, do your research, and just open a book and read as well. All right. So, anyways, let's talk about the price action now. I believe we had a few setups that probably has played out by now. Let's take a look, see if I can find them. We had a few setups that we gave, I believe, tools. Let's see if we can find it. My post, yep. Towards the beginning of last week, all right, and during the week. Okay, so prior to this setup, we've got two setups we're going to take a look at quickly. And the first setup is this. We realize, all right, we're in this range that we've been in for ages. This range is in a weird position because it's at the top of an external range. We were looking for two deviation plays from the range low and the range high setups, but we're also looking for two continuation plays in the case that we break above or below that range. Now, these are more swing plays, okay, and these haven't really played out yet as far as my estimate. Well, if we take a look, perhaps the range deviation at the low has played out. Perhaps that's played out if we extend this range line around. But it's not been a highly profitable trade. However, we've had an interesting bit of structure arise, and another trade we were looking at was a potential short idea. After this deviation from the range low, we said, all right, if we are to get a continuation play, it's likely gonna react off of this zone. All right. And I believe someone left a comment, said, yes, sure. And I think it can start earlier than reaching that zone. Yes, sober trading. You're probably right. And I think we did get a tiny reaction before we reached that zone. So what actually transpired was, we came up to that zone, the zone that was given in advance, and then we got a beautiful reaction from that zone. So congratulations if you took that trade. It was a very easy trade. And it was a trade that gave you a very nice market structure confirmation. So big congratulations if you took that trade. You should be in profits now, and you probably should have de-risked that trade already. But we're going to take a look at exactly what happened in a bit more depth. So if we zoom into our structure, let's drop down to the 1 hour. And we'll just rewind time. Ignore all these drawings. These are going to become clear and evident later on when we talk about the various levels of market structure, which is what I want to talk to you guys about today. So we were at this level, and at this level, what price did was price rallied down. It closed below the range, all right? And because it closed below the range, I said, right, where is the most likely place for a continuation play based on market structure? So, well, as you can see, if you look at the purple drawing, all right. Well, first of all, I'll just tell you, The black drawing is our primary market structure. All right. We can call it structure one. The green drawing is our secondary market structure. We can call it structure two. Now, the green drawing is the market drawing ascription from this high to this low. So we went down, up, down. Now, the purple drawing is our structure three, the tertiary market structure, where we've gone from this expansion leg here, from our structure two expansion leg, we've got down, up, down. Okay, some people will call this fractal structure. Now, the red drawing is your structure four, all right, which is maybe your fractal level two structure, where if you look at this expansion leg from your structure three, you've got again down, up, down. So this is a weird situation in the sense that this doesn't happen very often with Bitcoin and with many assets, where you've got perhaps four levels of structure. And this is possible, where you've got four levels of structure intertwining, all right, to give price action meaning. Now, what I said was, hey, we have broken bearishly from this fourth structure, structure four. Our retracement is due, all right, especially if we don't close above this level, which we didn't close above this level. But we had two zones to react from. First of all, we had this 12-hour zone. 12-hour zone is a big zone. It was not only a 12-hour zone, but it was a zone that was confluent with a point of control as well. And then we had above that another supply zone. So what price did is I said, well, I'm going to wait to see what I'm going to look to see if I get a confirmation there to get a flip, to get a market structure flip. Now, for those of you who are looking to long the move up, it was a bit of a tricky one just because we kept getting a lot of SFPs at the high, so not clear breaks. Unless you went down to a lower time frame, and even then, look, on a 24-minute, even this is not a clear break. That's not necessarily a clear break, especially if you look at structure the way I teach you guys to look at structure at the bootcamp. These are not clear market structure breaks. So, we're already almost halfway up back to our range without a clear decisive break. So do you really want to be long in that? Probably not. And not just that, you also have an obstacle above you. You've got this supply zone. Do you want to be longing into supply? Probably not. Now, if we got a trade, a structure that was more so like this at the low, we got a nice flip and a retracement that was still quite down low. Yes, I would have looked to long that all the way to that level there. But not only did we not get that, we didn't really get a clear close. We also know that we've got big supply above us. All right. So it's probably worth, and not just that, we also kind of got a close here. This looks like a close. This is not a clear SFP. So these are screaming, be careful. And as a result, I didn't enter that long. Okay, but what I was looking at was for that short from supply. So price played around. We got a tiny distribution model. We broke structure internally, bearishly. And then shortly after, we carried on. Now, the question is, why did we actually break structure here and not come back down? Well, the reason we did that is because the structure, it looks like we simply broke structure there just to come back and mitigate this demand zone. That's all we did. We came back to mitigate this demand zone to carry on up. But because of because of how much time we've got, I'm going to keep it brief and simply talk about that trade. So yeah, so price kept coming up. We're waiting to see what happens as it tags our zone. So as it tags our zone, this is where I'm going to drop down to at least maybe the 15-minute. And I'm going to trace price up to see, okay, can I get a flip in market structure? So far, our green structure looks like this. Up, down, up. Now, this is clearly not a 15-minute structure. This is more so looking like this looks more like a 1 hour structure. Okay, maybe even a 30-minute structure. But I'm watching this to see, do we have a reason to enter a trade yet? So at this moment, we've tagged into supply. Now, if I see a flip around this region, this would be a very good place to enter trade. Now, not only is this a great place to enter a trade, it's a great place to enter trade because this would be a pro trend trade. Why? Because we've had a flip in structure one. We've had a flip in structure bearishly in structure two. We've also had a flipping structure in structure 3, and also we're getting a flipping structure and a retracement off of that structure 4. All right, so all our market structure points are pointing in the right direction. So at this point, I'm looking at my structure on the way up, and I'm saying to myself, can we get a flip? Before we get a flip, we need to close below this level. So this is my decisional line to see whether we're going to get a flip bang. So we've officially had a close below that level. This is where I then say, right, let's look for a retracement into supply. Supply being this entire red box. This is where you might say, let's use a Fibonacci tool and take a pull from this high to the low and ask yourself, where is my 786 level? You can see that your 786 level is coming up there if you do trade Fibonacci. Now, Fibonacci is based on market supply and demand, by the way. So if you understand how to trade supply and demand, you won't really need your Fibonacci tool. But regardless, let's say you entered based off of Fibonacci. Now, you would have entered that trade right around there. All right. So we got a nice retracement. Now, let's pause. Just because price came back up doesn't necessarily mean you should enter that trade. Why? Because how many times have we seen price come back up for that retracement and then just carried on up? I mean, we saw it right here. We saw it right here. We had up, down, up, down, up. All right. Breaking structure, and then we carried on up. Okay. So what you want to see in a situation like this is you want to see what's known as a reconfirmation. So a reconfirmation is where in this final expansion leg, you get another flip in market structure, which gives you that extra added confirmation that you're headed down. That's really what you want to see in these zones. So now let's see if we get a reconfirmation. So what I'm going to do now is I'm simply just going to analyze the expansion leg from this point up to this point, and we're going to see if we got a flip in market structure. What to do that, I'm going to drop down to the 5-minute, and I'm going to look at my 5-minute structure. So let's do it. So as we go up, we've got high, 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 low, high, 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 low. We can call this a high, 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 low. Okay, and on the 5-minute, which is the time frame we're on right now, our structure looks like this. Okay, so that means we can't really justify entry into this trade based off of market structure unless we start to get a close below this level. And yes, we do get a close below this level. I'm going to drop down to the 3-minute. Let's say you play this on the 3-minute. If you play this on the 3-minute, you'd have had your close a little bit later for better risk to reward. So you would have entered there. Now, the issue with this is when you wait for that reconfirmation, yes, you are going to get into a trade that you have more confidence. Yes, 100%. But you also might get to a trade whereby you have less risk to reward. You've got trader A who just entered off of that Fibonacci zone. His entry is all the way up there. But then you've got trader B who waited for that reconfirmation. So this is trader A. Trader A entered off of that fib zone, which is up there. Perhaps putting their stop loss here, but that's risky. I'll put my stop loss all the way up there. Okay. And then you've got trader B who waited for that reconfirmation. So this is trader B. Well, trader A, let's do that for trader A. And you've got trader B who waited for that reconfirmation, which took place around here, I believe, and who entered there. So yes, trader A has already got a 2x return, and trader B has only got a 1.28. But trader B has more confidence, entering this trade, less anxiety pressing the sell button. Okay, so who do you want to be, trader A or trader B? It depends on your style. I'll let you decide. All right, so that's how we would have played that one. So as you can see, understanding structure is so key. It's probably, I think, the most pivotal primary cornerstone when it comes to trading. Now, if you don't understand structure, in my opinion, you are kind of, you're trading blindly, and that's okay. That's okay. All right, so that's how we would have entered that particular trade. Now, I would like to see. Oh, we've got we're on 20-minute mark. Okay, so I give it about 5 more minutes and we wrap this up. So yes, so what I'm saying is, yes, structure has various levels. So what we had there is we had our range structure, which came up there. Then we had a massive low there. This is what our range looks like. This was our range. Let's just call that our range. And then we had our internal structure from there, which came low, down, low. Okay. And then maybe we call that our structure 2. Call that structure 2 in blue. And then not only did we have that, we also had another structure from this point, okay, which came another structure from that point, which came 1, 1, 2, 3. Okay. And what we did is we entered on the retracement of that structure. So we looked to enter on the retracement of that. Bang, bang. This is what we've just seen. Okay. And we look to enter off of a zone there, a supply zone in that region. So as you can see, you've got structure 1, structure 2, structure 3. So it's important to understand, guys, the various levels of market structure. And you have to understand that your lower structures facilitate your movement in the higher structures. All right, so where's the next trade coming from is the question. Let's spend some time having a look at that. So what I can see is within this range, obviously we've got our massive swinger structure. We've got all this internal structure. It's clear to see that, whilst we are in this blue range, this being our blue range, okay, all of this that we see is internal structure. And because it's internal structure, our two trades still stand short from the range high, short long from the range low. So we've got a potential long from the range low that we need to consider. All right. And we've also got a potential short from the range high. Simple deviation plays. Very simple. Okay. Bread and butter trades. Now, based on this internal structure, because we got a flipping market structure here, the expectation of order flow is at least to come down to this low point here, because we have up, down, up. If we're taking our structure from the range low to our current price action, we have up, down, up. So you have to think, is this an up, down, up, just to mitigate the old demand for another up? And in that case, we need to look at this as a little bit of an accumulation phase for a potential move up. All right, that is the bullish scenario. Now, if there is a bearish scenario whereby we're going to take this low because we've had a flipping market structure there, you're going to look here to see, can we get an SFP off this low? If we get an SFP, that makes this a weak high. So a rotation to that weak high is likely. But if we get a close below that low point, then we've got very easy liquidity to grab here before we get down again to this range low, giving us a nice 3-tap model where you've got tap number 1, tap number 2, tap number 3. Okay. So based off of that, our trades then become very straightforward. It becomes very straightforward because in an internal level, we can look for longs and short from these, this accumulation that we're developing right now. Nice little range. So we can say, right, we can look to long it at the range low. And we can also look to short it at the range high. Okay. For a nice move up and a nice move down. Now, failing that, we also will look for a long at this SFP point. Okay. For a nice move up. This will be a brilliant move. Look at this. This is already looking like around a 20x play. This would be, if that was to happen, this would be an excellent move. All right. Now, these are 3 trades that could potentially happen in the next few days. Now, in the case that we don't actually quite come down for that third tap and price does something like this, where it plays around here for a bit and then it closes above this level, well, then I'm going to look for a retracement into demand for a continuation play up. Okay. So for that trade, I'm simply going to represent it using this tool and say that is a play that we're potentially looking at. I'm going to make it gray. I'm going to give it a thickness of 1, and I'm going to make it dotted because it hasn't happened yet. Could happen in the future. Okay, so that's another play we're looking out for. In that case, you're looking to use your fib if you're a fib bang out, or you're looking to actually use, supply and demand with market structure change. Now, what else are we looking out for? Well, if we hadn't taken out this low, I would have been inclined to consider a move where you've got down, up, down, up for another down. However, because we have taken out this low, that means, there is a possibility that we've gone down, up, down, up, down. A move up now would be a flip in market structure, all right, which could more likely present, uh, higher low for another higher high, which will burst through this zone. Okay, hence why I'm hesitant to put that. Now, if we hadn't taken out this low, then that would have been something I would consider. But right now, I'm less hesitant to direct you guys to have a look at that. Okay. Don't forget, it looks like we are reacting off supply here, sorry, demand here. Okay. So there is a chance, yes, we do get a move up. Perhaps on Monday morning or maybe tonight. Remember, Sundays is a very big day for Bitcoin. Wednesdays is a big day for Bitcoin as well. And that's when you tend to get a lot of volatility in the market. So definitely look out for that. Now, I don't tend to trade on weekends. So after this, I'll probably shut my laptop and leave it to you guys to cream off all the profits. But yeah, that's basically what I've got for you today. Now, if you found this useful, if you found this educational, don't forget to hit the boost, hit the follow. Don't forget to join on Discord as well and YouTube. Now, we are looking to grow this to 500 followers pretty soon. I'm not sure what it is on at the moment, but we are looking to grow it to 500. Let's take a quick look. So at the moment, let's see what we are on. Let's see, should be there. Okay, there it is. Oh, 369. 369. Yeah, no, well, we're gonna be there soon, don't worry. So yeah, hit the follow button, hit the subscribe button. I hope you found this useful. Don't forget, guys, risk management is key, position sizing is key. Make sure you're entering your trade, de-risking your trades as soon as possible. And we have got boot camp coming up end of Feb. So if you're looking to get involved with that, hit me up on the website, on WhatsApp, and I will reserve your seat. But anyways, otherwise, have a great weekend and enjoy the rest of your day.